What's up, everybody? Welcome to the Build and Growth Real Estate Show. I'm joined today with the almost all the HMB crew. I got Ryan Walsh and Ian Walsh here, pimping out the HMB background. Thanks for joining me, guys. What's cooking today, man?
Not much. We got to do that. We got to have one where we get every HMB member on this show.
we got what, 6 logins?
Yeah.
That's awesome. So, if you're new to the show, thanks for joining us today. If you're not new, come on. Or if you're new, we'd love to hear your comments. Monday through Thursday, or actually Monday through Wednesday, we typically go through and do some real estate education stuff. Thursdays, we have a guest. And Fridays, we do weekly news roundup, what I like to call the end of the world episode each week. Bayshore, what's up, man? Love having you on here. So in our end of the world wrap up, we'll talk about news and commentary, interesting things that happen throughout the week. And we'd love your feedback right before the weekend, just to hear what's going on in your world. So today, Judah is out. Judah Hoover is typically my co-host. He is out today, but he's at a funeral. And today we've got brothers. Let's see if I can get this right. Ryan Walsh and Ian Walsh right down here. Ian is in the midst of day trading, so we're going to make fun of him and see if he pays attention throughout the show. He is one of the 42% of traders that are trading with leverage right now, retail traders. So it's going to be an interesting conversation when we get up there and start talking about some of the mess that may be coming here. Anyway, so Ryan, since you're paying attention, man, how was your week this week?
In terms of lending in life, what are we talking about?
In terms of life, man, lending, life, whatever else. What kind of deals are you seeing out there?
Every deal. I mean, honestly, a lot of people right now are coming to me with a lot of auction deals, and they're not winning them. I'm just gonna say what it is. I mean, my personal thought is that inventory is so low right now that if you're on auction.com or even going to your share sales, whatever you're looking at, 100 other people are looking at right now. So I feel for my borrowers right now because they are working their butt off to find that good deal, and it's hard for them to do it right now. But that's what I'm seeing.
Well, it's true. One of the stories we talked about last week was the ridiculously low inventory, and I mean that just continues. Like it's like every week there's a new news story that's like, oh yeah, last week we had really historically low inventory. This week we have the new historic low. It's pretty wild.
Yeah.
How about you, Ian? What are you seeing? You see the stock market go like this?
The stock market? Yeah, stock market's at a crazy moment right now. It's everybody's feeling secure again, but nobody's really paying attention to like the biggest drop, the second biggest drop that we're seeing right now. I was saying to Ryan, a couple of the people that like right now, like today and yesterday, and basically starting last Friday, we're at a critical juncture in the market. So, but just like COVID, like what happened was there was huge moves maybe a week or two ahead of it being announced. And then once the big money gets positioned, then they go, oh, this thing called COVID is in the news. And, but so the money has to position first. So right now there's money shifting fast. So there might be some pretty big news over the next week or two that we can all look out for, maybe even today, to be honest, depending on how this market moves today.
All right. Well, let's jump into the news. I mean, our first news item of the day, I just wanted to memorialize September 11th. This is a catastrophic event that that happened in my lifetime and in a lot of our lifetimes. Everybody knows, if you were alive at that time or old enough to remember, everybody knows where they were at that moment, when they heard about it. And it's like, oh my gosh. And we just wanted to, kind of memorialize the people that lost their lives that day. And I mean, really, it kind of changed our country. And not kind of, it did change the country. And I think probably led to some of the financial issues that we were going through now and certainly went through in the 2008 crisis.
Yeah, I think of that as like a time when, when that happened, it's kind of like the way COVID is going to affect our country, is that like when it first happened, nobody would fly on a plane. nobody would travel. There was like a lot of racism going around and stuff like that. Same thing with COVID, right? All this crazy stuff happened. But then as it went on, a few of the things stick and most of it goes away. So the question is with COVID, like what's going to stick? I hope it's not these stupid masks. I really hope it's not the masks that are like the one thing that like, why do we wear, like 5 years from now, you go, man, why is everybody wearing masks again? We're like, oh, remember that COVID thing? I really hope it's not that. I hope it's more like, maybe taking temperatures or something. But something will stick. Like there'll be things that will stick from this. Not everything, but there will definitely be some remnants that will be with us, just like 9/11 for probably the rest of our lives or a very long period of it.
So we got some people chiming in. Ken it was saying in ninth grade, he was in ninth grade social studies class, and Bayshore jumped in and he said fifth grade math class. I mean, I remember I was doing squats in the gym when I heard about this little commuter plane, supposedly this little commuter plane that hit the building. And we're like, oh, that's interesting. And by the time I got home from my workout, it was like, oh my goodness, we're under attack. It's pretty wild.
Mm-hmm. I was on campus.
Were you in third grade gym class when you heard about it?
Ryan was probably actually a freshman as well in high school. I was a freshman in college. Yeah, that's right.
Yeah, I always forget, Ian, that you're younger than me. So
I mean, I'll remember. I mean, I don't know if this is appropriate, but whatever. I'm going to go for it. I remember I was playing. I'm a gamer. I'm a nerd. I was playing this game called Rainbow Six, and it's a game where you hunt terrorists. And this was literally the night before, and I was playing with my friend who was sitting behind me, and the first plane hit. And this is before, like literally before you knew like this was an attack. Like, so I stupidly, as you're being in ninth grade, I was like, I bet it's terrorists attacking us, like joking about it. And then the second plane hit, and then the news came out. And I just remember looking at my friend like almost embarrassed that I was joking about what I said,
Right.
But
yeah, foot in mouth. But like, there's no way you could like have guessed that, right? That would be like impossible.
Yeah.
But it was just I heard a story yesterday, so it was so compelling specifically about 9/11. I mean, I guess I could tell it now. No, I don't really want to tell it because I don't want to get somebody in trouble. But bottom line, somebody was assessing risk in like 2000, right? Of like, so when you're trading or you're in a business, you assess like items that can happen, right? Or things that can happen. One of the things the dude said was, the Twin Towers being hit by a plane was one of his risk assessment potential possibilities. I was like, how is that possible? Like, how is that possible? Like, there could have been a million things. You could have been like a tidal wave wipes the country out, like aliens bomb the earth. But like that specific one was in, he was like, I look at that and go, there was like a supernatural, power, like giving him a heads up. Yeah, like something.
What's really interesting, though, Ian, is that there was an author that published a book. He had already written the book, and it was with the publisher before September 11th. And it was the same premise of almost exactly what happened. And at the same time, the CIA was gaming the same type of scenario where we have these terrorist attacks. So, I mean, like, I think like all kinds of technology and knowledge just in general end up, kind of infiltrating our lives sometimes, you know what I mean? In like different times. It's like the nuclear bomb, right? It was being invented in the United States, in Germany, in Russia, all at the same time in history. And it just so happened that technology reached that point. I don't know why. I don't know how the Twin Towers, and terrorism ended up becoming part of our reality, and being in front of people, so many people at the same time. But it's pretty crazy stuff. Mm-hmm. Anyway, so let's move on and take a look at our first news story today. I think it's important to remember what happened during September 11th, so we never forget that we have to be vigilant and make sure that we just turn and hug and love the people that that are close to us, and don't wait till tomorrow to do the stuff that you got to do today. All right, so Ian is a day trader from time to time, or maybe every day. But interesting news here from COVID. The Harris poll did a research poll, and we found that based on a poll that they did from September 3rd to 4th, there's a huge uptick in people touching their stocks all the time, and instead of investing in a mutual fund or like these EFTs, they're trading individual stocks, and 43% of retail traders are trading with leverage. So, Ian, I'm gonna turn this over to you and say, look, man, tell us what that means.
So leverage is like margin. It's not, well, to the average person that's trading, they should really not be, affected by leverage because they should have some sort of control over themselves. But that's not, degenerate gambling is not really having control of yourself. So like typically like margin would be like this, would be like, all right, like let's say I put up like, let's say I put $25,000 in a day trading account.
Right.
I'll typically get 2-to-1 leverage. Or if I'm in the futures market, I might get like 100-to-1 leverage, meaning I put up $50 and they give me $500 or $5,000 worth of buying power. Now you'll get like, if I have $50 and the market moves against me, they'll just margin call and wipe me out. So, I have
no idea what you just said.
So if I have like, most traders will then also trade with a quick, like a tight stop, right? Or should trade with a tight stop. So like if you have a $50 account that you're trading $500,000 worth of buying power, your account stop might be like $2 of the $50.
Yeah.
So like, it sounds like you're just getting more buying power. But there are definitely people that what they do is, and this is where it gets trickier, you read the news stories, they will like have the buying power and then let a trade go really far against them. And then be like, all right, it'll come back. I mean, that's essentially what happened in the crash, right? If you take like huge market positions when it dove, people are sitting there banking on it coming back. But that's like the most dangerous thing in all trading, because you're always one trade away from disaster, from ruin, right? Like your next trade could always be your last trade if you trade like that. So what really this uptick though, in my opinion is, which is, just like the housing market, which is like artificially propped up, and they're like, there's been no, the vacancy rate or the non-rental market in April and May was down to 1% and we're getting a rebound. It's like, no kidding, it was 1%. Nobody could leave their house, right? So it was like this artificial thing from COVID that like didn't really stand for real statistics if they were trying to sell them. So the same thing in trading. You have two things happening right now. You have all these people that were home for 3 months not making any money.
Right.
So like you either signed up for DraftKings or you signed up for like Robinhood or like one. And so at the same time, what they did was a lot of these big brokerages offered massive leverage in tiny accounts. So like you can trade, you could put $50 in an account and trade. So all of these like new retail traders like hit the market with not knowing what they're doing. They're putting $50 in, whereas like the barrier to entry is typically at the minimum was like 5,000 on a futures account, usually 25,000. They made these they call them micro futures and micro stocks. And it's just a way to create liquidity. So in my opinion, the scare of trading with leverage, quote unquote leverage, is I would like to know how big the majority of those like 43% their accounts are. I bet most of them are under $500.
Yeah. Okay. I mean, so if you don't put a stop loss on your account on a trade, that's where the real exposure.
Yeah. It'd be like equivalency in real estate would be like, all right, we're going to buy this house. We're going to start renovating it. And then like things start going wrong in the renovations. Right. And then instead of eventually being like, all right, our cutoff point is like 30 grand in losses and we're just liquidating this thing, you just keep every wall you open up, you put more money in. And it's just an unlimited pile of money. You just keep dumping instead of cutting your loss and selling it and being like, we lost on this, we're out.
Right.
Like we're out at 30 grand. You just keep, boom. And then all of a sudden you get to the end, you go, you know what? The whole house needs to be rebuilt. And you do it all, it's just an unlimited pile of cash that you're blowing through when you should have cut your loss on the house, $100,000 ago. Same thing in a trade.
So I read an article a couple of months ago when all this news came out about Robinhood traders and stuff like that.
Mm-hmm.
This kid was making money trading with Robinhood. Like, I say kid, he was a freshman in college. Okay,
the suicide kid.
Yeah. He committed suicide. And he lost like $1 million, and he was like devastated. He didn't even. probably didn't even know what he was doing. And I think that's the real scare with stuff like this. The other fact that I pulled out of this article that I didn't put up here is more than half of these people were in households where the household income was less than $50,000 a year.
Yeah, like so that would support my theory on likely the majority of these 43% have accounts less than $500 because the barrier to entry at the same time COVID hit was so low. Like there was no time in trading history where you can take $50, put it in an account, and trade at all. So that's very likely what's happening. And instead of using like the hey nobody's losing more than like $500 headline, they like to put the 43% are using leverage, right? But it's just like the COVID statistics. It's like 100,000 people have died. They want, as opposed to like, hey, only 100,000 people died. This is statistically insignificant. So it's like how the headlines want to spin. It's the same thing.
Gotcha. All right, Ryan, what do you think? Cut them off or leave them in?
Cut Ian off or cut the retail traders off? So I mean, honestly, so I did the Bitcoin trading back in 2017.
Yeah,
I was big into that, and I did it with two buddies of mine, and they're the ones who got me into it. And lo and behold, about a month ago, they are saying, "Yo, you got to get into this again." So to me, that is just a precursor to saying, "Okay, there's about 3 months left before
the new top."
And because when I did that Bitcoin, I don't know if you remember, it was up to $20,000.
Yeah,
$20,000. It's all time high, and then just tanked to like 3,000, right? So I mean, it's identical conversations. The trading volume is the same too, because that's something that's massively changed in the markets that we didn't see before. Is like a 1% move pre-COVID on like the Dow Jones was kind of a big day, right? Like that was a big day. Yeah. Now it's like if it's not moving 2-3% up and down, one day, then it's like what's going on, right? So it's identical to what the Bitcoin market was like, and to me, I'm not touching it this time. Like nope, fortunately I only lost about 5,000 when I did, and I know it's like wow, holy shit, you lost 5,000, but it could have been much, much worse. And this, I learned from my last scar. I'm not touching this one this time. So that's my thoughts.
The Bitcoin stuff is kind of interesting too, because all of those, the secondary and tertiary coins are the ones where people really made a ton of money on, or lost a lot of money, where they went from being worth 15 cents to $1. And almost all of the commotion and movement on the coins were based on somebody promoting it in one of their pay per courses, right? So, I mean, I had a client who his whole business model, he took $3,500 and turned it into more than $300,000 in the course of 6 weeks. And his whole business model was sign on for early notification to this one guru. The guru would, hold a conference call once a week or once a day. He would invest, and then he would publish a paper. Like the dude would publish a paper, and by the time everybody heard about it and started buying the stock would jump, 500%, and then he cash out, and he did it again, and he did it again. It was outrageous. But
if he cashed out, then I believe you. So what I always say is, because we're going to talk about this. I know it's coming up with Elon Musk. Yeah. You can say I made millions of dollars trading, and it's like, yeah, unless you cashed out at $1 million,
yeah,
I don't hear about it.
Well, dude, he lost $45,000 in 15 minutes, and he's like, yeah, I don't have the heart for this, and cashed his money out. I mean, and good for him. He was up enough that it didn't matter. But it was like win over win over win over win, and then he had that one loss, and he's like, yeah, this isn't for me. I'm out. I'm done.
If you cash out on a positive, then he won.
Exactly. All right, so let's jump into real estate. We're going to start with unemployment news. There's some really interesting things happening right now. I mean, last week's new jobless claims came in at 884,000, which was about 35,000 or 34,000 higher than projections. And the continued unemployment claims actually increased to 13.385 million people that are jobless. What's really interesting about this number in the context is that at 8.4% unemployment in August, it's likely significantly understated, and that is something that is a little bit disconcerting. If we had Judah on here, he would be fighting tooth and nail to be like, yo, the real estate market is hot, is strong, everything's cool, because that's his take on it. And you know what? So far he's been right. But I know at least two of the three of us, Ryan, I haven't heard your thoughts on the real estate market and real estate futures, but there's a lot of indicators like the unemployment rate that really are concerning. And I think our listeners, they've heard my doom and gloom.
So, let me ask you first, Josh, why? Do you think there's a direct correlation from your perspective of the unemployment rate to the real estate market? What's your connection there?
Well, so there's a couple things here. First of all, if people can't afford, if they can't afford something, they're not going to pay for it, just in general. The unemployment rate right now is listed at 8.4%. And based on the real unemployment rate, which includes miscategorizing people that are, they're called absent workers, like people that took a vacation or an extended vacation, or they're taking off for maternity leave, or it's a short-term situation where they're sent home from work for a week or something like that. That accounts for like 0.7% of the of workers were miscategorized into that category as opposed to unemployed. Okay, I'm going to circle back, but I want to just hit on this stuff. In addition, there's something like 4 million, 3.7 million. Okay, people that just totally fell off the people that were looking for work between February and August. They just disappeared. They disappeared from the numbers because they've been unemployed for so long that now they just don't count them anymore. And so you've got this huge number of people that are unemployed. So this is why it matters, right? If you're talking about renters, tenants have to pay rent. If they don't pay rent, landlords can't afford to put them in the property. We know right now, we're going to talk about evictions in a couple minutes, but we know right now that there's somewhere in the neighborhood of 20 million people across the country that qualify to be evicted. Okay? They're not paying the rent. It's only a matter of time before that affects landlords in a really significant way, because something like 50% of all landlords are like mom and pops with a handful of rental properties. They're not these big companies. Well, if they can't afford to pay their mortgage, that's going to have a chain reaction. Thankfully, right now, unemployment is disproportionately hitting people that are on the lower financial spectrum. Not that's not a good thing, but the unemployment rate for people that have a high school degree or lower is like 14%. Whereas opposed to, if you have a college degree or better, it's only like 5%. It's like 5.3% or something like that. It's just a matter of time, though, before that trickles down. Because if consumers don't have money to buy, they're not going to buy stuff. There's not going to be jobs for anybody, right? And I think with housing, right now we've got ridiculously low interest rates, really low inventory, and high demand because of the interest rates and because of some of the demographic changes. That's going to end at some point, right? Like it's going to end when that artificial stimulus is gone. I think first you're going to have lower end homes that are typically sold to first time home buyers. Just the bottom's going to drop out. The second thing is I think that will then trickle up to more median home prices. And I don't think it's going to be a huge, I don't think it's going to be what we saw in 2008, but it could. And then, it's going to hit higher end homes too. I mean, the forbearance and foreclosure rates for those jumbo mortgages is going up. So, I mean, that's my take.
Yeah. I mean, I think you hit the nail on the head here with this is honestly a class differential battle right now, because you have I'd probably even say lower middle class and higher, right? So if you go upper middle class to whatever,
yeah,
sitting pretty, like everything's great. Nothing, COVID's not that bad, right? It's the world under that I think there's no spotlight on. Media is not going to cover it. You're not even going to see this in really real estate metrics right now that they are really just grasping for air right now. And they are getting it in terms of, you can't be evicted and whatnot. But like you said, that is going to end. And I think I don't know if there's a trickle up effect, if that's a thing or anything like that, but the bottom's gonna be taken out first before the top.
Yeah.
So I definitely do agree with you that, right now everything's fine and dandy, but if you really look at it in a microscope, everything shows that it's not going to be fine and dandy, and it's going to be really interesting to see how it plays out. I don't know how it's going to play out. I don't know if any of us have ever seen, because it's not like the whole market is getting hit the same way this time, right?
First of all, thanks, Aaron, for the love. We love the likes and love. Don't forget to like and share the show. But on an aside, in 2007, I had 3 flips that were underway in subprime markets when the subprime industry, Jason Balin was a subprime lender at the time, right? And so Jason, one day he went to work and the next day he was unemployed. There were loans that were scheduled to close the next day, and then they didn't close and the banks went out of business, and it was overnight. Now, I don't think that the banks have been lending with such aggressiveness as they have in the past, during that time frame. But I do think that, at some point you run out of A-class borrowers, and then you run out of B-class borrowers and C-class borrowers. And, if banks aren't lending, what are they doing? How are they making their money? So I don't know.
It's got the feel of it's a slow bleed right now. People don't realize they're even bleeding. That's what it is. It's being covered up, right? But the question is in a year from now, are things going to change enough where the bleeding has stopped and it does go, in a certain direction? Or is it all of a sudden, like you said, you're just going to pass out? The bank's just going to pass out from not having enough blood, right? And that's what's really, really, people are saying, why aren't you lending aggressively right now? It's honestly, I get the market's hot right now, but that could be a totally different conversation, whether it's tomorrow or 6 months. I don't know. I have no idea. And I don't think anyone knows.
I think we're looking next spring. Honestly, I think that's when the foreclosures are likely to hit. We had a guest on here 2 weeks ago that does a lot of short sales. Jason Sanservino. If you're looking to do a short sale, reach out to him. He does really good work. But he was pointing out that some of his conversations with banks and REOs, they're looking at, especially in Pennsylvania, where you have a lot of other states where the forbearance rates, they spiked and then they came back down. In Pennsylvania, a lot of these people, they just never filed the forbearance paperwork. And so as soon as the banks can foreclose, they're getting filed. And so that's a big problem. So this leads to another problem here. Our next conversation, evictions. Philadelphia, they reopened Tuesday after months of pandemic shutdown. And as part of that reopening, they announced that, hey, guess what? We're going to temporarily stop evictions. There's going to be a stay on them. There's a big push here to. I don't think Trump did any favors when he put that allowed the CDC to come in and stop the eviction process or stop the lockouts from happening a couple of weeks ago. But
which is crazy to me, by the way, which is crazy to me that the CDC is we're now the experts here in real estate, and we're going to make this call. It's what else?
But the only way that they could do that, the only way they could take such action is by saying, you know what? We're afraid that COVID's going to spread across the country to all of these people getting evicted. There's going to be so many homeless. This is a real problem that is going to.
Well, you know what it is? It's kind of remember back in 9/11 when everything became an act of national security. This is now an act of, spreading a cold. So it's where does that end? And then as soon as somebody wants to put up some resistance, you go, nope, it'll spread the cold. It's just it's kind of a crazy thing. Now the national security thing that went on for a while. That was a good 10 years of that whole line being. it still goes on, but it's not quite as like
Or you
racist.
just got
Literally.
It allowed
What's that?
a sitting president to be investigated by the FBI on the covert, like under the table. I mean, like,
yeah, like they can always like call it up
Right.
when they need it. So like what I think will happen is we're going to see a bunch of situations where it's used in like really weird ways, just like in real estate, wherever the hell they want to exert some power,
Yeah.
right? But then it'll die off. But then all of a sudden, like in 2030, we're going to get this weird elections being shut down due to national, health concerns, and like health concerns all of a sudden are like something that we accept. Does the general populace accept this thing now of, this is how it's handled? And it basically just shifts. It's just like a power shift, like power shift to national security, like, in the what was it? The NSA, right? And then power shift to CDC. Like it's just shifting power organizations out of fear. It's kind of nuts.
Well, it's like these guys, they are terrible. They need to be reined in. We're going to take the power away from them and give it to this other organization. And meanwhile, the head of this terrible organization just goes and leads the other one. It's like change the name. Instead
it's like people that have all this weird power now, like Fauci, for instance, and like the weirdest one to me, the weirdest one is Bill Gates. Like,
Dude. Yeah.
Like he became a doctor. Like, I don't know. Like, I get it. Like you've probably spent a lot of time, a lot of money, a lot of resources around this information. There's a valid argument for that. But like, to me, it's not too far off from when like people are like, when they go up to a celebrity, like, an actor, and they're like, give us your opinion on the political election. It's like, what? You know nothing about politics. Why? Like, and then we're holding your opinion significant. Like, what does that mean?
Listen, 3 commas gives you a doctorate in any field you want it.
Yeah. You ever seen the signature? You ever get an email with those signatures? It's crazy.
Yeah. No, I agree. So if Philly's not bad enough, I could not believe this news article. If you're a landlord in Portland, Oregon, man, you are a glutton for punishment. So there's a proposal by the city council in Portland to make landlords pay to relocate tenants if there's any rental increase. So listen to this. Up until this point, I mean, this is already on the books. Check this out. If you increase rents by more than 10%, you have to pay for the tenant to move. It's already a law. Outrageous, right? Like,
that's nuts.
It's nuts. That's already there. They're trying to pass this proposal now that anytime that the rent is increased, if you increase it $1, if you have a standard increase of 3% in your lease agreement, which is less than inflation, boom, you have to pay for your tenant to move. In addition, they're of course extending the eviction moratorium for another several months until the end of the year. And I mean, here's the craziness. Between May and July, an estimated 12 to 15% of their tenants didn't pay at all. And so this is, basically, this is like a slap in the face to anybody that wants to be a landlord. That's rough.
I mean, I'm not, if you want to like plummet, that's a good way to plummet a local market. Start putting things like that in place. Like, I'm out. I'm not being a landlord in Portland. Like, if it was ever a consideration, which it wasn't, but if it was, like, I'm out. If I'm a local landlord, if I can set, like, you'll tank prices on that. That's a really terrible. That one's bad. That's bad.
Well, so the thing is, though, there's a lot of these municipalities. They have these kind of gut reactions, right? Where it's like, oh, the rich people are leaving, so we have to penalize them, or the people are suffering. Let's make it harder on the people that aren't. And I mean, you see this in Philadelphia too. Like, you absolutely do. Like the some of the changes they made to the permitting process for construction, right? You take the people that follow the rules and you penalize them, and the people that don't follow the rules, they're not going to follow the rules anyway, right? Like it's just I don't know.
I mean, yeah, that one specifically, like when you start making law, like those laws, it went from like proper capitalism to neutral to anti-capitalism, right? So proper capitalism was like you have your open market, you abide by it, which is your tenant. If they don't pay, they get evicted, right? Then you move to neutral, which was staying the evictions, right? Yep. And you're like, now you've neutralized like capitalism in general. But then when you go to the other side and you make the landlords, like, it literally reversed itself in every capacity. That's bizarre. I don't remember. I mean, maybe we didn't pay as much attention in the last crash, but I don't recall anything that kind of opposite. You know, it's the opposite of making money. Like, if you want somebody to not make money, like, not only, you know, the eviction thing is one thing where you basically freeze their bank accounts, but when you go the other way, you're just simply, there's no incentive.
Yep. Yeah.
Is there like a suspected play here? Like, is Portland being like, we want to own these properties? So
this is the same city where there's been protests since the beginning of June, like every day. You know, I mean, like, it's a.
I guess I'm just trying to understand, like, what, like, why, like, there's usually like a reason that you would say we don't want landlords here, right?
Well, did you ever study socialism in general? Like, when the Soviets took over in Russia, the first thing that they did is they made everything the people's, right? Everybody owned it. And then there was a housing shortage because the landlords got kicked out and, you know, they were demonized and all this and that. So there's a housing shortage. So if you had a 3-bedroom home and you had 2 people living there, all of a sudden you had somebody move into your house. And then the housing shortage continued. And if you had a 2-room house, you could have 2 families living in, you know, and like, it just, unless somebody has the profit motive, you erase the profit motive, you're going to erase the incentive to keep things nice, to attract, you know, good people into your unit. You know what I mean? Like, it kills the market and it kills progress. It kills good things.
Yeah, I don't care like what anybody says. Like, I get like the benefit of society, and I'm all for that. Like, I think I've actually, in my time in like real estate in general and like property management, I think I've developed like a much more, you would think that I would develop like a harder side to me, but I developed a much softer side in like capacity for people, like in general, just understanding circumstances that like most people in the middle class, we just don't, you know, you don't understand, or we live in a bubble that we don't really relate to until that potential scenario is at hand, right? But from a big perspective, like, unless everybody kind of makes that change and they're willing to like forego their pocketbook, the situation is going to be, people individually have to be incentivized to make money. If you're not incentivized to make money, just whether you believe in being a person that believes in rights for everybody or not, you're not going to get enough people to act on the better interest of society consistently, because at some point they're always going to be an imbalance. That guy got more than this, and that person got more than that, right? So like, that will always imbalance. So all you have to do to like shift an economy is just remove the incentive. And I'm not like some like, you know, like I maybe at one point in my life I was like a bleeding, you know, every man for himself, the best man wins. Like, that's not what I'm saying here. That's definitely not what I'm saying. I'm not that person. But if you just take that possibility or that potential out of society, or out of the reason to invest, people will just be like, I'm just going to invest somewhere else. Like, you can't win it doesn't work.
When you have competition, like if there's a financial interest, right, you're going to have people competing to create a better product, to create a better place to live, to you know, attract more sales. Like, and obviously if you eliminate that, just nobody's going to enter that market. Right? Like, who wants to work for free? Nobody goes to work for free, except entrepreneurs.
Yeah. I don't know. I mean, I'll be really curious to watch how that's handled in Portland. That's a super interesting social experiment on its own.
Yeah. All right. Weekly update on the mortgage rates. Once again, Fannie Mae announces that the average 30-year fixed mortgage rate hit historic levels at 2.86%. Money's so cheap, they're giving it away. I mean, it's pretty nuts.
That is the only thing that I think at the moment that I can see on paper that can counterbalance, you know, the market. Like, you know, it's really hard to not look at some of these houses right now. Like, you know, even I aggressively upticked my search when I started. I'm like, I could buy, get a $600,000 house or $1 million house or whatever I want for like the price of what would have been, half of that 5 years ago. So it's like there's a huge imbalance there. I don't know how long that's going to last, but right now,
2 to 3 more years. The Fed already said that they're not going to aggressively raise interest rates for 2 to 3 more years.
I mean, honestly, you can't. It makes a really good case to convince me that like we're all going to be on Bitcoin before then, because it doesn't make sense. It doesn't make sense.
A couple weeks, it might have even been last week. The federal government partnered with MIT to research creating a digital currency. Yeah, man, it's already there.
Wow, that's an interesting partnership. What are you trying to say? What are you doing?
So roughly 19 million U.S. households could lower their interest rate by 0.75% or more. Interesting stuff. All right, we've run long enough. I got 2 bits of.
I do this show more often. I've been short the whole time. This market's falling off a cliff. So thanks for doing this, Jeff. Appreciate it.
It cost $2 million while we were on this on our broadcast.
Let me see what do you look like right now? The market's not, before everybody leaves. Let me just today is a critical juncture, and this bottom could fall. Well, not when I say bottom could fall out, we need to. So there's an old saying like in trading in general, which is like when you have like significant bottom or top or whatever, it always gets retested, right? Like there's always a retest or another leg at it. It very, very rarely just goes straight up and stays there. So this move is the move to test March's lows. I told Ryan that. So if we're going to do it, it's happening. It started a week ago. Now it's not going to happen overnight, but like if we're going to go see the lows, it's like we're at the crossroad that goes, you either go right through the highs and we stay there like right now, or we're going back to March lows. And then you go, wait a minute, March lows. Like that was crazy. Like we're going to go back down there. That seems impossible. But that is the moment we're in right now. And actually, as we speak on this show right now, the market is in a very specific spot to signal to the world if that is a reality of where we're going. Because if you break today's 2 days ago's low, you start to free fall. I would expect the news to start to occur over the weekend or into next week that something is going to be, in our headlines.
All right. So one more sign that the world is coming to an end.
This is good.
2-year-old python in St. Louis just laid eggs on July 23rd. The female python laid eggs after not being around a male python or any other male snake for the last 15 years. So, I mean, I'm scratching my head. What can I say? Last news item of the day. My man crush Elon Musk lost $16.3 billion earlier this week in stock value when Tesla stock dropped 21% on Tuesday. Man, that is a hard beat.
It's all relative, man. It's all relative.
Yeah, but it's the single biggest loss in 1 day of trading ever. It's a pretty big deal. So hey, it's going to take him an extra 10 years to get to Mars. It is what it is.
Yeah, right. It's like one rocket.
Right. Exactly. Well, no, his rockets don't cost $1 billion. That's just the U.S. government. Anyway, all right. Hey, guys, thanks for joining us today. Bayshore Travis and Jeremy Bayshore, thanks for showing us some love here. Guys, if you enjoyed the show today, don't forget to like and share. We'll be back here. I'll be back here with Judah on Monday at noon. And till then, everybody have a great weekend. We'll see you then. Take care.
Thanks for having us.